Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Enrico D'Angelo of Parkwalk Advisors. Hello, Enrico.
Hello, Alex.
First off, perhaps you could tell me a little bit about Parkwalk.
Parkwalk was established in 2009 to invest in the asset class of university spin-out companies. Since then, we've grown significantly. We've raised over £150 million of EIS funds, and in February of 2017, we were acquired by IP Group plc, which is a specialist FTSE 250 company commercialising hard science intellectual property.
And your EIS, what does it actually aim to do for investors?
Well, the aim of our Opportunities Fund is to generate significant multiple returns for our investors, and it does that by adopting a sort of three-pronged strategy. Firstly, we co-invest alongside institutional investors so that these companies, when they grow, because they always need multiple rounds of funding, these aren't just one-shot investments. The first part of our strategy is that we co-invest alongside other institutional investors who can provide those further rounds of funding and support for these companies on the road to commercial success and exits. Secondly, we aim to invest across what we call the growth curve. So we invest in very early stage companies, and we also invest in later stage and AIM listed companies. And finally, the other part of the strategy is we give each of our investors a portfolio of 5 individual companies across a broad sector of technologies. So for instance, we can give people a portfolio ranging from companies in artificial intelligence, in quantum computing, in genomics, and all of those give give people an opportunity to see and invest in different technologies.
And just to make it clear to viewers, nearly all these companies are what we call university spin-outs, is that correct? So
that's correct, yes. We only invest in university spin-outs. And these are companies that people think these are sort of riskier entities, but you've got to remember that a university spin-out is a company that's created by a university based on the world-class research and technology innovation in this country. We as taxpayers spend £5.5 billion per year on research in this country, and the universities take that research and they have to create that sort of social impact, the giving back to the country by commercialising this technology.
Do you want to just give a few examples of companies you've recently invested to give viewers a flavour of what you actually do?
One recent investment is a Cambridge company called Geospot, which is a sort of strange name, but it's actually a supercomputing architecture that has been built to analyse what's called extreme data sets. So what's happening in the world of extreme data is things like genomics are generating vast amounts of data, mobile phone networks are generating vast amounts of data, and what this company has created is an architecture that can analyse this data in real time, which is a very, very difficult thing to do. As an example, when they first trialled their first machine, they analysed a data set in 2 days, and at the time IBM Blue Gene project took the same data set 2 weeks to analyse. They're now doing a trial for a customer at the moment where they are analysing 30 petabytes of data. It's a huge amount of data. And to put that into perspective, the entire Netflix catalogue is only 60 petabytes of data. So, it's an incredibly powerful technology that, will be able to sort of look at vast amounts of data set in real time. So it's incredible technology. And, we've invested in another company called Mind Foundry from Oxford, which is an artificial intelligence machine learning technology that, again, analyses data, but actually in a predictive way. So what they're trying to do is analyse data and actually predict when things may go wrong or actually need maintenance and sort of aspects like that. And again, that was based on the research of the particular professor who actually created the methodologies to analyse what's called the square kilometre array, which actually generates something along the grounds of 1 terabyte of data per minute. So it just sort of shows this takes all the astronomical data into a square kilometre of telescopes and analyses that data. And those are just two of the companies we've recently invested in.
Okay, so those are the sort of companies you like. Is there any type of companies that come out of universities that you particularly avoid?
Not necessarily. I think what you get is what we call hard science, patent protected IP type companies. And the universities are commercialising those. They're also very large engineering scale type technologies, and those are really beyond an EIS fund, because those, even from the beginning, require vast amounts of capital just to get them set up. So for instance, out of London there generally are quite large engineering type companies who need to raise the 10 to 20 million pounds of investment right at the start, and those really are not the type of investments that we invest in. We're very much along the lines of investing in technologies that we can see developing, that we can see are innovative, that there is a market there that they can sell into, and that customers want that technology. There's a need and a want for that technology.
With EIS, it's really, as an investor, it's all about getting an exit. Have you had any?
Well, I think the answer to that is yes. We've had quite a few, actually. So we've had 13 exits to date. 6 of those have been positive and have generated between 2.5 times and 15 times investors' return. And one of those has been flat, and the other 6 have been lower or write-offs. So what we're generating is an exit track record. We're returning cash to investors, and that's the really important thing in this space, is generating cash returns back to investors. And as I said, we've done that on 6 occasions in a positive manner, and if we continue that 50% success to failure rate in our exits will generate significant returns for our investors.
Out of the companies you've exited, can you give viewers any examples?
One company we've exited, which we won Exit of the Year for, was a company called Xeros Technologies, which is actually listed on AIM now. So when we first invested, this was a company that was a private company based on a technology out of Leeds. Basically, the technology was a professor who invented polymer plastic beads, and what they did was they took those beads, which actually then had the potential to absorb impurities and dirt, and turned it into a washing technology. So basically what they did was they created new generation of these polymer beads. They put them into commercial laundry machine, and they're now effectively sort of putting those out into the world. So they're now into all the bigger hotel chains, and they're looking to expand into different technologies. It's an incredible success story, and it's being taken around the world by the government as an example of British innovation.
And any other examples?
The other example was we believe we're the only people to have made money out of nuclear fusion, so we invested in a nuclear fusion project from Oxford University, and this was a recent sale. It was a secondary sale to another big institutional investor of 2 weeks ago, which generated 8.5 times return for our investors. And again, what that demonstrates is that when these companies succeed, it does take a long time, but actually what you're seeing is that the early stage EIS investors are getting in at an earlier stage at a lower valuation. But these companies inevitably, when they succeed, generate value. They increase their valuation, but they need to attract bigger institutional investors who can then come in at those later stages to fund the 20 million, the 30 million pounds that these companies need to grow to that over 100 million pound valuation.
So the EIS investors right in at the beginning.
Yeah.
Now, is that insanely risky? Well, you touched on it briefly, but
EIS investing is risky. That's why the government gives the tax breaks. It is growth, it is risky, but our strategy of co-investing alongside institutional investors gives those companies the opportunity to not rely on the EIS and say angel investors when they need those further rounds of funding. So that's an important strategy. The giving people 5 individual investments, again, what that does is it spreads the risk across different technology sectors, so that we're not just in life sciences or genomics or computing. And then our strategy of giving people a spread of different maturities. So we tend to give the investors one very early stage one later stage, say AIM listed one, and the other 3 in between. And what that does is it maximises our opportunity of trying to exit as soon as possible after that 3-year holding period. Having said that, the average at the moment is just over 4 years for pretty much all of those exits. Some of them have been sooner, some of them have been a bit later.
Which is pretty speedy. But also perhaps it's worth just mentioning that it's not just finger in the air stuff. Most of these companies, they've been to become a company in the first place, they've gone through a rigorous selection
Yes,
process. And perhaps I don't think many people outside of this space would understand what university tech transfer offices, etc.
So what happens is the universities have what's, as you just mentioned, called a technology transfer office, or a TTO. And these are organisations that are quite large in the bigger universities. So as an example, Oxford has what's called Oxford University Innovation. It has something like 90 people, staff, PhDs, they've got sort of, consultants, ex-McKinsey consultants, they've got patent lawyers. So they've got a whole raft of people in there who their entire job is to look both inwards to the university and seeing what research is being undertaken, but also externally to understand what is the pull that's out there, and then they can understand which research group potentially has a piece of technology that could be used, and that's quite important. So as an example, Oxford has roughly 800 projects on the go at the moment, and what they do is they then evaluate each of those opportunities and look at them and see, okay, which ones will work, which ones can we form a management team around, which one can we raise money for, and it filters down, and actually on an annual basis Oxford pretty much only spins out between 8 to 11 companies a year. So of those projects, you're only getting, say, maximum of sort of 10 companies per annum. And of those 10 companies, they've all been through a process where the IP and the patents have been researched, the freedom to operate has been researched, those TTOs have found a management team, and they've formed the company, they've made sure that the investors have got protection, that there's board governance there, and that the management team can hit the ground running with sufficient funds. So, from that aspect, it's not just creating an idea around a professor. It's very much a professional approach to creating these companies and ensuring that they've got the best chance of succeeding commercially.
And perhaps also important to point out just 15 companies that have come out of Cambridge University spun out in the last few years, and they're worth over £1 billion or $1 billion.
Cambridge has the stat. Yes, of the in recent, if you sort of go back, but certainly 15 Cambridge companies are worth over $1 billion, 2 of which were worth over sort of $10 billion. Perhaps a more pertinent fact is that if you look at the Cambridge sort of seed funds, these are funds that have only invested in Cambridge spinouts, and PitchBook, which is sort of US sort of analysis of investment on a global basis, put those Cambridge funds as the best performing venture capital fund in the world. For a sort of cohort of 2008 to 2010. So, it just goes to show that when you invest in these companies, you take a long-term, patient view of the investment cycle, and those Cambridge companies generate, massive returns. In fact, actually, Oxford obviously do it as well. You've got Imperial College, you've got UCL. I mean, all of these universities, those 4 universities are pretty much always in the top 10, if not the top 20 of the world's top universities.
Well, that's very interesting. Now, if I'm going to invest in an EIS this year and interested in this area, why should I choose Parkwalk?
Well, as I said, firstly, we've got a sort of proven track record. We have demonstrably given cash back to our investors. We've done that on multiple occasions, so we do have a sort of proven track record there. The team are going to continue to be in this space. We have a FTSE 250 parent company, so we've got all the support there, and we've got an unparalleled deal flow. It's very difficult for an individual to get into this space. It's very much a mixture of funds and institutional investors, and so there are an incredible array of technologies coming that we're about to invest in. As an example, we're about to invest in a number of quantum computing companies, which is, the UK is at the forefront of this technology. It's the next generation of computers, and we're investing in that sort of technology. And again, the potential for significant returns is incredible.
Enrico D'Angelo, thank you very much.
Thank you, Alex.